Welcome back to the Daily Crypto Roundup. Today is Wednesday, December 24th, and this is your same-day, up-to-the-minute crypto briefing for people who are working, traveling, and still trying to keep a clear head while the market does what the market does. We are staying live right through the Christmas period because the reality is simple. Headlines keep dropping, prices keep moving, and most people do not have time to sift through 10 different sources just to understand what actually matters. So, here is what we are covering today. We are going to start with a quick run-through of the main headlines shaping sentiment right now. Then we are going to lock in the top 10 coin prices, including the 24-hour move for each one. After that, we will expand the stories and connect the dots. Why Bitcoin is slipping under the pressure of holiday liquidity. Why the mood feels risk-off. What the smart money is doing. Why altcoins are struggling. What the latest read is on XRP's on-chain activity versus fund flows. Why deal-making is exploding across crypto companies. Why legal risk is rising as this industry becomes mainstream. And why the political narrative heading into 2026 is starting to matter more than people realize. So the headline rundown first, in plain English. 1. The market is soft, and the overall tone is risk-off as the holiday period drains liquidity and traders step back. 2. Bitcoin has dipped below $88,000, and the market is trying to decide whether that sets up a bounce or a deeper slide. 3. A major market maker is effectively warning that the classic altcoin season rotation is dead right now because Bitcoin dominance is rising, flows are weak, and supply events like token unlocks keep applying pressure. 4. XRP is hovering around $1.88, but the story is mixed. There are signs of continued interest through fund flows, while on-chain activity is not matching the same level of excitement. 5. Crypto deal-making is running at a record pace, with billions of dollars in mergers and acquisitions this year, and even more expected in 2026. 6. We are seeing more legal friction around crypto as it integrates into the traditional system, and the rise of private litigation is becoming a part of the landscape. 7. The broader narrative around 2026 is beginning to harden into a simple idea. If crypto becomes integrated enough into mainstream finance, then any future crisis becomes a political problem as much as a market problem. That is the map. Now let's lock in prices, because prices are the foundation. As of right now, Bitcoin is trading around $87,000, reflecting a modest retreat from recent highs. Ethereum is trading near $2,900, showing a slight lag behind Bitcoin as traders remain cautious. Binance Coin is sitting around $840, with little movement over the past day. XRP is trading at approximately $1.86, holding near its recent range even as overall market sentiment softens. Solana is changing hands near $125, generally following the broader trend lower. Cardano is trading around 36 cents, with subdued activity on its price chart. Dogecoin is near 13 cents, moving in a very narrow range over the last 24 hours. Tron is trading just under 30 cents, again reflecting limited directional conviction. And looking across other mid-cap tokens, we see prices that generally echo the pattern of flat to slightly negative movement, all pointing to a market that is consolidating in this holiday period. Those are the top 10 right now with the 24-hour move. The first thing to notice is that the top of the market is basically flat. Tiny green numbers do not mean strength. They often mean a market that has stopped moving because nobody wants to take the other side in size. That is the real story of holiday conditions. Not wild pumps, not wild crashes, but thin liquidity, sudden wicks, and a market that can feel like it is asleep right until it is not. Now let's build the day's narrative properly. The first major theme today is the simplest one. The market is struggling to find direction because liquidity is drying up. Holiday trading conditions do not just reduce volume, they change behavior. A lot of the big players, the discretionary traders, the macro desks, the people who normally provide depth, are not putting on fresh risk. That means price can drift lower on relatively small waves of selling, and it can also jump higher on relatively small bursts of buying. The danger is not the direction itself. The danger is the lack of stability around that direction. That is why you are seeing repeated headlines about Bitcoin slipping under $88,000 and traders debating a breakout versus a breakdown. In a normal high liquidity environment, levels get tested and defended with depth. In a holiday environment, levels can break simply because there is not enough volume sitting there to absorb the move. If you are listening to this while traveling, or while you are at work, the key point is this. Holiday markets exaggerate outcomes. They make small decisions look like big trends. We are going to pause here for a quick word from our sponsors. Stay with us. The second theme is the risk-off mood, and this is where the gold conversation keeps coming back into view. The story that gold outperformed Bitcoin across 2025 is not just a fun talking point. It shapes investor psychology. It reinforces the idea that, in this cycle, traditional safety won the safe haven contest. And when that idea spreads, it makes investors more hesitant to buy dips, because they do not feel the same certainty that Bitcoin will behave like the ultimate hedge during stress. That does not mean Bitcoin is broken. It means expectations are being recalibrated. Now, layer on top of that what market participants are actually saying about positioning. One of the more important notes in today's news cycle came through the lens of market structure. The message that the classic altcoin rotation is effectively dead for now. This is tied to the rise in Bitcoin dominance and the continuing weakness in flows into smaller tokens. When dominance rises, it means Bitcoin is taking a bigger share of the market's total value. Sometimes that is bullish, because it can imply capital is consolidating in the strongest asset before expanding outward later. Other times it is defensive, because it implies capital is fleeing risk and hiding in the most liquid name available. In the current tape, the dominant story reads as defensive. That is why altcoins are leading declines even when Bitcoin is not doing anything dramatic. It is not about one token failing. It is about the market refusing to take broad risk. And there is a very practical reason for that. Supply. A lot of altcoins have token unlocks, emissions, and scheduled releases that create a steady selling pressure. In a market with strong inflows, that selling is absorbed. In a market with weak inflows, that selling becomes the trend. So when you hear altcoin season is dead, the underlying message is, there is not enough new demand to offset the steady supply coming to market. This matters for your day-to-day decision-making because it changes the baseline. In a healthy risk-on environment, you can hold a basket and expect rotation to lift everything eventually. In a risk-off environment, you have to be far more selective, because the market stops rewarding simply being in crypto and starts rewarding being in the strongest liquidity. Now let's talk about XRP, because XRP is a special case in terms of narrative. XRP is hovering around $1.86 to $1.88. And today's story is not just price, it is the split between visible interest and on-chain signals. The latest reporting is essentially a mixed picture. Interest in XRP remains present, including through the big money channels people watch. But on-chain activity is not surging in the same way. That usually implies one of two things. Either people are positioning through more traditional rails rather than moving tokens around on-chain, or the market is trading the narrative without a corresponding rise in real network usage. In the short term, both can support price, but they mean different things for durability. If you are an XRP holder, here's the clean takeaway. XRP can move on narrative and positioning even when on-chain activity is quiet, but the strongest, most sustained moves usually arrive when narrative, liquidity, and usage line up at the same time. Today's read is that the market is still waiting for that full alignment. Now, one of the most important bigger-than-price stories today is happening in the corporate world, not on the charts. Crypto deal-making is running at a record pace. This is not just one acquisition. This is an industry-wide acceleration in mergers, purchases, and strategic roll-ups. When you see this kind of deal flow, it means companies are not preparing to leave the industry. They are preparing to own more of it. This matters because mergers and acquisitions are often the clearest signal of where insiders think the next phase of growth is coming from. Companies do not spend billions buying assets they expect to collapse. They buy assets they expect will become more valuable once the system matures. And in this cycle, the target is very clear. Infrastructure, regulated access, derivatives, compliance rails, and anything that helps bridge the gap between crypto and traditional finance. The record pace of deals also tells you something about how the industry is changing. Early crypto was a growth story built by startups. The next phase looks more like traditional finance, where scale and licensing matter, and where major players buy rather than build. That kind of consolidation is often what happens right before an industry becomes fully institutional. Now we need to connect that to the legal story, because the legal story is the shadow that follows integration. One of the most overlooked shifts in crypto is that, as the sector becomes more mainstream, the risk profile changes. You still have market risk, obviously. You still have volatility. But you also get traditional system risk. Lawsuits, compliance disputes, private litigation, and the slow grinding reality of regulated finance. The latest commentary on Bitcoin volatility and the rise of private litigation is basically describing the next phase of pain for this market. Not the pain of price drops, but the pain of rules. And there is a paradox here. More regulation and more legal clarity can be bullish for adoption. But it also creates more legal exposure. When the system gets formal, people sue. That is how traditional finance works. And as crypto firms become larger, more connected, and more systemically relevant, the legal environment around them becomes a bigger part of the market narrative. The key idea floating through the higher-level commentary is that if crypto becomes sufficiently integrated into the mainstream financial system, then the next crisis is not just a market event, it is a political event. The argument being made is not that a bailout is guaranteed. The argument is that once crypto is intertwined with pensions, regulated banks, and mainstream payment flows, it becomes harder for governments to stand back during a major failure. That is the significance of the 2026 framing. In the same way that traditional finance has backstops, tools, emergency facilities, and political incentives that appear during crisis moments, the suggestion is that crypto could drift toward that same reality as integration deepens. This is a controversial idea because it clashes with the original ideology of crypto, which was designed to avoid dependence on the state. But markets do not run on ideology alone. Markets run on incentives, and incentives change when something becomes systemically important. Now, if you think the future of crypto is total separation from the legacy system, then the bull case depends on pure adoption and pure organic growth. If you think the future of crypto is partial integration, then the bull case changes. It becomes about regulation, legal clarity, and institutional frameworks that allow huge pools of capital to participate. The difference between those two visions is massive, and 2026 is being positioned as the period where the direction becomes clearer. This is where the deal-making story and the legal story suddenly make sense as part of a single arc. Record mergers and acquisitions tell you that companies are racing to scale before the next regulatory phase locks in the winners. Rising legal activity tells you that the system is already becoming formal enough to generate traditional disputes. And the political narrative tells you that the stakes are rising because the system is no longer a niche experiment. It is becoming a real financial market that governments have to think about in stability terms. That is the big picture. Now let's bring it back to the near term, because the listener still needs practical guidance for the next week. Holiday liquidity is the main driver of how price behaves right now. A thin market can whip around. That means you should be wary of overreacting to a single candle. A small drop can look like a breakdown. A small pop can look like a breakout. In reality, a lot of this may be noise caused by thin depth rather than true directional conviction. Bitcoin sitting in the mid to high 80s, basically flat over the last day, is not screaming panic. It is showing hesitation. Ethereum being almost flat as well is consistent with that. Solana, XRP, Dogecoin, and Cardano being slightly green is consistent with that too. But again, the small green numbers are not the point. The point is that the market is not showing broad risk appetite. It is showing cautious drifting. And if you are wondering why this matters, it matters because the next big move will be exaggerated by the same lack of depth. That move could be up or down. But whatever it is, it will likely be sharp. So if you are trading, you manage risk tighter. If you are holding long-term, you focus on the narrative rather than the noise. Now let's cover one more important angle: sentiment. Investor optimism is weak. That can sound bearish, but sentiment extremes can create opportunity. When optimism collapses, The market can become fragile, but it can also become primed. If selling dries up because everyone who wanted to sell has already sold, then even modest demand can lift price. That is why, in markets, despair can be fuel. The key is timing. Sentiment alone is not a trigger. It is an ingredient. So where are we, emotionally, as a market? We are not euphoric. We are not in full panic. We are in a fatigue phase. And fatigue phases are where big narratives quietly get built. Because attention drifts, and fewer people are focused enough to notice the structural moves. That is exactly why the corporate consolidation story matters. It is happening while retail is tired. Now let's close with the core takeaway for today. The chart is not the whole story. Right now, price is flat at the top, but the narrative is heavy. Holiday liquidity is distorting movement. Bitcoin dominance is rising. Altcoins are struggling because flows are weak and supply is persistent. XRP's picture is mixed, with interest present but on-chain activity not exploding. Corporate deal-making is accelerating, which is a strong sign of long-term confidence among insiders. Legal risk is rising as crypto becomes part of the formal system. And the 2026 narrative is sharpening into a single question. Does crypto remain an outsider asset, or does it become integrated infrastructure? If crypto becomes integrated infrastructure, then two things happen over time. First, access widens, which can be bullish. Second, the system starts behaving like traditional finance, which means legal friction, compliance pressure, consolidation, and potentially political involvement during crises. Whether you love that or hate that, it is a reality you should understand, because understanding reality beats reacting to noise. We will keep tracking this every day through Christmas, because this is exactly the season where markets can move fast while attention is low. If you are listening while traveling, working, or just trying to keep up, you are in the right place. Leave your comment for the XRP giveaway, and we will be back with the next update. Smash like, follow, and we will see you at the top.